Okay, the selling climax, again my favourite buying opportunity, especially when it's tested. It's a widespread down closing in the middle or high after a substantial down move has already taken place. The volume is ultra high. As a market falls day after day, a point will be reached when traders will start to panic and, encouraged by bad news, will start to dump whatever it is onto the market. Here we've talked about stock. If the market closes in the middle or high, then professional money must have decided that the lower prices now looked attractive and will start to buy into the panic selling. The activity will cause the volume to be ultra high. This marks the low point of the market. This is a nice one, Philip. I mean, that is probably, again, a very obvious one. We notice here that you've got very excessive volume. I'd call that Shaq O'Neal +1.
Yes.
I mean, that's enormous, isn't it? I mean, that should catch your attention on any chart. And of course, those of you that have got the Trade Guider program, I think the majority of you have, will be able to scan and find this type of thing, both in the end of day and the real-time program. And we see here that they mark it down big. So it is a gap down bar, nice big widespread, closing just off the low there. Volume is massive, next bar is up, and that is a real guarantee that that's the end of that. But then they bring it back down again for more buying here. You notice the volume is less than here, but it's confirmation. If you see that sort of activity, that market or that stock needs to be brought at that level because it's going to be a bargain at that price. Yes. But the news will probably be confusing.
And also on that second low you just pointed out, where there was less volume, that's because they've already removed a portion of the floating supply on the previous lows.
And that's what happened actually. If you go back and look at Goldman Sachs last year, you'll see that there's massive volume in November, but as they remove the supply that's there, the volume gets less and less and less until it's all gone and it goes up.
Yes.
That's how the markets work, isn't it?
Yes.
Yeah, on supply and demand. Oh, that's a good question, Maurice. Does the presence or absence of bad or good news affect how you trade the selling or buying climax? Most often they're on news, I have to say. I'd say 95% of the time there's some sort of... Because remember, we're talking about the herd, Maurice, with which now you are no longer a member because you understand these principles. But most people that you talk to, ironically, it was interesting in New York, the Traders Expo, we really hit a nerve with people when we showed them that JP Morgan stock, because a lot of them had bought it. And when they had all lost money, and I think that's why our seminar was full at the end there, because when I showed them the reality of it, it's so obvious, but they didn't understand volume. And all their signals were buy signals at that level, which they would be because the price was rising. Maurice, I think what Tom taught me about the newspapers, and I did do this before we got involved with the company, I went and looked at the program and the charts, and where I saw some unusual volume on a day, I'd usually go and check to see if there was a news-driven event about it and keep a copy of it. And I still do that now. I mean, I'll show you at the end here, my Internet Explorer is all saved with news stories about stocks, which I then go and show people what the market actually did. Because human beings have very short memories. They just don't seem to remember things. I do remember when I did a seminar in Brisbane, Australia, a gentleman had come up to me, and it was a stock that actually was rising called Silex, S-I-L-E-X. I remember it very well. And I sat there and I said, this particular stock here, Silex, actually I was talking about weakness on up bars. This gentleman had just bought 5,000 shares of Silex. He said, look, they've just announced this, some sort of timber mill or something, I forget what it was. And the market jumped up, big high volume, narrow spread, almost like the end of a rising market. But I knew what was going on, right? And he said, well, look, Mr. VSA, he said, I've already made, because he'd already bought here the day before, he'd already made money. He said, what? He said, this is going to continue to go up. I said, well, look, if that were me, I would certainly be moving my stop up to protect it. Or, indeed, I'd take off some of my position. I said, I probably wouldn't even be in it now. Anyway, the next day, I remember this well, I was doing my seminar, and at the end of the day, the group were there, and he was there, and he said, could we just look at that stock again? And he really looked upset. Would you believe it? It was a 2-bar reversal at the top. Yeah. Massive one. And this time, he'd lost not only all his shares, he'd actually got stopped out further, so he was really in a hole. And he didn't understand the logic, the psychology of what was going on. He was a herd member. He's now a customer, fortunately, and he's doing great from what I hear. Okay, so after you see that, it's a serious sign of strength, and it'll often, if not always, will mark the bottom of a market. If you want to be safe, look for the first test bar and put your buy order above the test, just the same as for bag holding.